Hi everyone, how you doing? Chris here. The housing market is taking an absolute battering in the UK right now. So let's have a look at see what's happening and have a look at Persimmon and see what's happening with the results because they released their annual results last week. So let's find out what is actually going on the ground. So first of all, you can see that the Persimmon share price has taken a little bit of a dive. So since the start of 2021, we've been trending downwards all the way down. You can see this big slump in 2023, and this might just still be the start, to be honest. So we're going to have a little look at the results and just see what this means for the share price going forward. If you are an investor in Persimmon or if you're not, it's always interesting because it affects all the housing stocks, and it really does affect the economy as a whole too. So this is what's in the news right now on the BBC. House prices see biggest annual fall in 10 years. Oh my God, horror. This is terrible. Everything's collapsing. Actually, it's not that much because you see, if we have a look here, house prices fell by 1.1%, which is a drop, right? And people don't like to see the value of their biggest asset drop. So the majority of people in the UK own the most amount of their money is in their house. So if their biggest asset is going down in value, then that can be a problem. You get into a problem where you have negative equity. So everybody's been buying houses over the past couple of years. And what that means is if house prices go down, then that means the house is worth less than the debt they have to pay back, which is actually bad because that puts you in a lot of debt and you can't sell your house to get that debt back. So that's why that's quite bad. The Guardian is saying house prices are crumbling. Oh, it sounds terrible. And so is Britain's faith in property ownership. So this builds on the fact that actually people are now not wanting to buy houses because the interest rate is too high and they can't afford it. And they see that house prices are dropping. And what that means is you don't want to buy an asset which is going down in value. So what happens is it's that sort of negative feedback cycle, or positive feedback cycle, should I say, because what happens is people don't want to buy houses, so the values drop even more, and then they see it drop, so they don't want to buy houses anymore, like still don't want to buy, and it drops more and drops more and drops more, and it keeps going. So when is this going to end? Like, what's going to happen from now? It just seems like it's the start, because people are facing like a little bit of a crunch, and it seems like, obviously, people are not wanting to buy houses. They've bought their houses over the past couple of years while rates were cheap, and now rates are too expensive. So it's you can see here, figures released last week show UK housing prices were falling at the fastest rate since 2012. So that means asking prices have been cut by an average of 14,000. So it's not actually that much just now in the grand scheme of things, considering the average house price is around about £250,000 in the UK right now. So what is the Financial Times saying? UK mortgage approvals slumped to their 5th consecutive monthly decrease. So this makes a big difference for the house builders. So let's talk about stocks, right? So obviously this is going to be bad for house builders and any industries associated. So companies that are providing materials for house building, right? That's going to be really bad for them. So you can see here, FTSE 100 house builders Persimmon and Taylor Wimpey said this week that sales of new houses were trending around 20 to 30% lower year on year. So let's have a look at the Persimmon annual report. And what we can do is we can see what they say, because this is super interesting, right? We're just going to go through a couple of numbers really briefly, because you can see here new home completions, right? This annual report was just released last week, and it's very telling. You can see new home completions actually went up from 2021 to 2022. So this is kind of like the peak. So we're still going up. And now we're hitting 2023, and this is when things are starting to go off the edge of the cliff. And when I say cliff, I do mean that. It's not just scaremongering. I mean, this is genuinely happening right now. So to take heed of this, it doesn't mean go out and buy a house. It doesn't mean go and sell all your Persimmon stock or anything. This is not advice. This is just literally what's happening, and you do whatever you want to do with this information. So we're going to flick through. There's lots of good news, cash flow's going up, blah, 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 blah. But these are the key figures, and these are the key takeaways, right? The group's current outlook network would imply 8,000 to 9,000 legal completions for 2023. 8 to 9,000, whereas previously we were at almost 15,000, so that's about half. Now, Persimmon's facing a massive margin squeeze at the moment, and all the other house builders will be feeling this too. The cost of raw materials, the cost of building a house is going up, and the price that house builders can sell at is going down. So you're getting this massive margin squeeze, and who knows whether that's going to cut out all the profit. Maybe it'll put the house builders into negative profit, so they'll put them into a loss. They'll have to build houses and they won't be able to sell them. Or maybe it won't be so bad. Maybe the house prices will stay high and the raw materials will go up, but they'll still make a margin. This is what we have to wait to find out. We just don't know. But what Persimmon are saying, there's lots of warnings in here. Look, so margins may reduce by around 500 basis points, impact operating margins by around 800 basis points. So 500 basis points is 5%, 800 basis points is 8%, and the operating margin at the moment is 27%. So you take off 13%, and that's the operating margin halved immediately this year. So that's quite a big chunk, especially if Persimmon still have their bills to pay. You know, if they're keeping on all of their staff and staff costs are going up, we're going to see a massive decrease in profit. And the share price at the moment is sitting around about £13. So let's first of all have a look at the dividend as well. So the dividend is 60 pence per share, and they're saying that they're going to release the dividend this year, and next year it's going to be 60 pence as well, and that's around 4.8% of the share price. So if we just go back to the share price as well, we can have a little look at what it's doing. So obviously, since the news, we can see that it dropped off from about 1,450 down to about 1,300 at the moment, so it's not too bad. I mean, it's really at previous values. I mean, Persimmon was up at 2,200 and it was trading round about a sort of 8, 9, 10% dividend yield. So if it was to maintain that dividend yield, if investors wanted that same return, we're talking about the share price halving from here. Now, again, not scaremongering, not telling you to sell your Persimmon shares, but if we're looking at previous values, then all the house builder share prices could halve. There's lots of danger in the market. There's lots going on, lots of uncertainty, and investors are really scared of uncertainty. They just don't want that. So lots of big investors might be selling their shares in order to buy them back when things are more certain in the future. So that's just something to watch out for. It's again, anything could happen. The economy could rebound, house prices could rebound. So we just don't know. But this just looks like a lot of warning signs, especially from the horse's mouth. You know, in the annual report, this is what they're saying. So take heed. You know, don't ignore it. So that's Persimmon, and the same is true for the rest of the house builders. So hopefully that gives a little bit of information about what was happening. I do lots of these videos just in one cut, in one take. I don't tend to edit at the moment. I don't want to, because I feel it's more natural doing it this way. So sorry if I just make like if I'm a little bit hesitant or if I'm trying to think about what I'm saying, but I always think it's just better to show personality and show how things go. But anyway, without further ado, let's just cut it there. You'll see 2 of my previous videos here. Please do hit the subscribe button and just that wee thing that appears just down there, and I will see you all very soon.